I've got a great Forex setup for you that could win big. Be sure to hang around for it. Hi, this is Tim from TradingStrategyGuides.com. Okay guys, we're halfway to the number of likes and comments I need for the question and answer session. I know you can get it there, and you'll be able to ask me questions like, why do we park on a driveway and drive on a parkway? I mean, who wouldn't want to know that, right? So look in the upper right of this video for a card for Monday's video and pop up there and leave a like and a comment, and let's do this thing. Today I'm going to show you a great Forex setup, mostly because I know you guys like Forex setups the best. We'll do that shortly. Oh, and I made a mistake on the Dish Network setup the other day. I'll show you about that too. And the usual bunch of charts. We got some new targets hit and so on. Remember what day it is, right? Let's go for it. Remember to click the subscribe button and hit the bell so you won't miss any of these awesome mystery trade setups. Let's take a look at the charts. Well, as I mentioned the other day, we've got some profit on this dollar Mexican right here. The stop is currently at break even, and you see we came close to it but didn't hit it. We're waiting for the PSAR to get down here so we can start following stops on this one. If this pushes down below the original target, I believe I might switch to a daily chart and start tracking the PSAR on the daily chart, because I think it may take a little bit of time to get down here. Be nice to start locking in a little bit on this second half. Okay, I've got the Euro Swissy locked in right now at 107.39, which is roughly where our PSAR is currently. It came to within 1 pip of taking us out right here. So we've got 156 pips locked in. Hopefully this thing will push on down from here and make us a little bit more. But who knows? We'll see. I'm not real fond of this wick right here on spot gold. It came up most of the way to our target, but didn't make it, so we're going to have to watch this one. Hopefully it was just clearing out orders so it can push on up. Look at this. Bitcoin hit our target yesterday, finally. Our target was 93.5104. At that time, I took half off the trade for profit and moved the stop to break even right here on the second half. And then I switched this to a daily chart. Like I mentioned on the USDMXN, I'm going to start tracking these on the daily chart once they've hit the first target. So the PSAR is up here about 82.2873. So we've got our stop there, locking in 47.92 on the second half. We made about $1,700 here on this one. So if this thing keeps pushing up this way, I think we're going to see a quick move up on our stops on Bitcoin. As anticipated, the New Zealand dollar, Canadian dollar closed below the 20 EMA on Wednesday. I took the loss right then, right here at 86.35-ish. This is an example of why I do that. As you can see, it went down right here and hit our stop loss, and we saved 40 pips by getting out on the close below the 20. The whole reason for taking the trade was gone, so we got out of it. I'll be watching this to break above the 20 once again for another buy. Sold this close below the bear flag on the Euro Japanese yen. It came within 1 pip of hitting our target. That's annoying. And then it popped. Looks like it could be headed back down there again. So that's good. By the way, I'm not behind the door about taking my profit when the price gets this close to the target. But of course I have to be around when it happens, and I wasn't in this case. So I missed it. But if you get that close to your target, just take your profit. One of my maxims, of course, is the time to get pi is when pi is passed. Well, the pi got passed down here, and I missed getting it because I wasn't around when it happened. That's just the way life is sometimes, right? Okay, as I mentioned, I made a mistake on the dish chart in Monday's video. I had this as a daily. It is actually a weekly. We will buy a weekly candle above 37. I will, however, be using the daily ATR for my stops and the targets. I don't plan on using weekly ATR anymore for stops and targets because of the amount of time it takes to get there. I don't want to wait that long. I don't want to have to trade small size because of a big stop loss. So we may have weekly setups in the future, but when the weekly setup triggers, we're going to use daily ATR targets and stop losses for it. Okay, let's take a look at the mystery Forex setup. Well, this one is very mysterious, as you can see. I was looking through the Forex charts and this jumped out at me. This is a great bear flag setup on the US dollar Japanese yen. And it's been going on for some time now, and honestly, I'm not sure why I didn't see it. A bear flag consists of a downtrend that turns into an upwardly moving parallel channel. A flag like this is a continuation pattern which typically breaks in the direction of the incoming trend. I will only take a short position from a bear flag like this. If a candle closes above this flag, I will consider the pattern blown and there will be no trade. Also, I like to see a nice decline in volume and volatility. I'm measuring the volatility using a 14-period average true range, or ATR, which shows us the average of the length of the last 14 candles. I also use that same ATR for targeting and stop losses. So here's the trade plan. We'll sell a daily candle close below the bear flag. On the breaking candle, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but reaches 75% of the average, I'll open a half size position to reduce risk. You can calculate the percentage by dividing this volume by this volume average, and the result should be 0.75. If you don't get 0.75, stand aside on the trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So that means, say this candle breaks down to here, the close is right there, that is your sell signal, that is your sell entry. On that day, look down here at the ATR, multiply that by 1.5, and measure that distance above the entry, and that will be your stop loss. And then measure 1 ATR below the entry, and that will be your first target. If after entering the trade, you get a close back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout below the bear flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Now typically I do this with 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the new setup on the US dollar Japanese yen. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims. They help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. feel free to borrow from my list. And today, Tim's trading maxim number 33. A sequence of anecdotes is not data. Data is the meticulous collection of results of a test with a sufficient sample size from which you can draw actual statistical conclusions about market conditions. Anecdotes are, well, I'm never going to trade breakouts from patterns because this one time I lost all my money, blah, blah, blah. You get it? Anecdotes are simply stories. Stories can definitely teach us something. However, developing trading rules based on stories is just craziness. Sound trading is not based on the one-off anomalies that happen in the market. Sound trading is based on edges provided by statistically valid market movements. So don't make your rules based on a sequence of anecdotes. Take the time to thoroughly test your strategies and don't base your decisions on stories. Remember our daily US dollar Japanese yen trade plan here. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Pics email list to be sure you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget to pop up to Monday's video and like and comment there so we can start this question and answer session. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great Wednesday, and I'll see you on Friday.